Good morning. Thank you for joining us. I'm going to just give it like one or two more minutes here for some more attendees to come in, and then we'll get started. This is being recorded, so just to let you all know that. If you have an issue with that, just hit me a chat and I can send you a recording of it afterwards that you won't be on, I suppose. We're joined today with the team from the Virginia Pace Authority, and I am going to pass it over to Abby and Ellen to get started.
All right, I will kick everything off, and we are so glad that you could join us today to hear what's going on with Virginia PACE, especially this past year. We've had a lot of exciting projects and a lot of jurisdictions join the program. So we're going to be talking about those since we are making waves, or we made waves last year. So Holly, if you could go to the next slide. So for those of you who don't know or haven't met us, Virginia PACE Authority is a nonprofit organization that was started by Abby Johnson. And I think it started probably in 2019, but Abby has been with the program or working in PACE since at least 2012, and she can tell you more about that when she comes on. But we were awarded the state contract to be the PACE program administrator, and we have been doing that role for the last several years. And what that means is that we approve the PACE projects, and we are responsible for working with onboarding jurisdictions, with approving projects when they come in, and working with the jurisdictions, working with our PACE lenders, working with our contractors who are registered in the program. We have been, well, Abby's been doing this for a long time. We also have a sister company, Abacus Property Solutions, where we also can do consulting about PACE projects. And right now in PACE, and we will go into this more later, but right now we have at least 24 jurisdictions, which represent at least 51% of the state. And it is a corridor that manages Northern Virginia and comes down through Richmond and heads on down to Virginia Beach. So we are covering at least, as you see there, 51% of the state's population. Last year, we did at least 108, almost $109 million in PACE projects. And so to date, we have 125 million projects or $125 million worth of PACE projects that have closed in the state. And we will go into some of those projects later on. Next slide, Holly. So I'm going to just tell you a little bit about our team. As I've mentioned, Abby Johnson is the executive director, and she is the owner of Virginia PACE Authority. And then I am the senior director, and I work on marketing and outreach to jurisdictions. Abby does all those things as well, in addition to running the company. We have Andy Friedman, who is one of our advisors, and I particularly work in the Northern Virginia area, and Andy is down in the Norfolk area. And then we have Holly, who you see, she runs our applications program. She's a subcontractor to the program, but she's definitely a big part of the team because she's the one that manages all the applications when they come in for projects.
Thanks, Ellen, for that. And in addition, we have Alex Alejandro Salinas on. He also supports our team in marketing and outreach and admin. So just want to give a quick thank you for that quick intro on our team. And basically, we are actually hiring an additional person who will handle Central Virginia. So we have Ellen in Northern Virginia. We'll have Rebecca in Central Virginia out to kind of the western part, Andy in Hampton Roads, and all of us will cover the Shenandoah Valley and down to Southwest Virginia. So for any of those of you who are not familiar with CPACE, I think probably a lot of you are, but we just wanted to give a really quick overview about what it is. So what CPACE is, and that stands for Commercial Property Assessed Clean Energy. Kind of a mouthful of an acronym, not developed by us. It's been around since about 2008, started out west. but it's now in the majority of the country. And Virginia is one of the programs that is actually doing really well and is actually one of the broadest in terms of what you can use it for. So it's a kind of financing. CPACE financing allows for a wide range of measures to be financed through its program. This includes energy efficiency, resiliency, stormwater management, environmental remediation, and other improvements like EV charging infrastructure. It is both a powerful tool for economic development as well as for clean energy, energy efficiency, and resiliency. So it's a great kind of balancing between the two. CPACE financing was established by state code, and it basically authorizes local governments to also enable CPACE at the local level. This is done by passing an ordinance and participating in the program, which is sponsored by Virginia Energy and administered by our organization, the Virginia PACE Authority. And when you actually are doing, we'll go into this a little bit later, but basically the reason why you need the ordinance is because you are actually authorizing the placement of a voluntary special assessment uh, with the CPACE financing on private property. Because it is a special assessment and has some of the advantages of being secured in that way, the local governments must be involved. Uh, Basically, what we do this for, and we'll go into later, is it offers a lot of financial benefits having this kind of structure, this public-private partnership. But basically, we have a standardized documents, including ordinance, the agreement with the state, and all the underlying loan docs, we call them financing documents, are standardized for local governments to use. It is not a public tax, and it's not collected by the locality. So this is really acting like a private financing vehicle, even though the public sector is involved through passage of the ordinance and interacting at each transaction on a very little minor level. Basically, what this allows, this allows for really great financing, which we'll get into later through the project that we're going to be highlighting today. So next slide, please. So I think just really briefly, and Steve, who's going to be presenting later from PACE Equity, will go into more detail, but here's some of the top benefits we see both for existing buildings and new construction. With respect to existing buildings, basically it funds a wide range of upgrades. So if you have an old building and you have old HVAC, old lighting, old roof insulation, basically if you upgrade it with the current code allowable measures, you're going to be eligible because what you have in there before is older and less efficient than what's in there now. And when you do that, you're basically, enhancing your building value. You're creating a better building. It's better to work in. It has less energy and water costs typically, and this is something that's provides a win-win for the building owner and the tenants. And in many cases, it can be net flow positive, cash flow positive, depending on what you're installing in the building in terms of the reduction in energy costs. PACE also funds soft costs. So that means a wide range of certifications like LEED or also energy audits, legal costs, other things like that. So really, if you want to, also funds part of the development costs that go along with it. So there's really a wide range of soft costs that are funded by CPACE. And CPACE, you have basically a payment that is very similar to the payments you have with a regular commercial loan. So that payment is paid directly to the capital provider, typically on a biannual, every 6-month basis. We also have a really nice feature now in our program where you can go ahead and even finance through CPACE projects that are already completed. And for those jurisdictions that are using the ordinance as of 2025, when we update the legislation at the state level, you can go back 3 years. If it's before 2025, it's 2 years, but still, it's really nice to have that feature. Next slide. And I think when we're seeing CPACE being used, most of the time is for new construction or gut rehab. And what it really is great about it is that it can fund up to 100% in our program between the senior debt and PACE, you can go up to 100% loan to value. That's not typically what's allowed by senior lenders and C-PACE lenders because you always want equity in the project, but we're just letting you know that we are trying to make this as flexible as possible programmatically. What we're seeing is it really replaces expensive other kinds of debt that fill in a gap in the capital stack. So often you'll have like a loan, say at 60%, and you need 40% equity. If you can show that CPACE can help fund some of the, the energy efficient projects, clean energy projects, it can become part of the capital stack and either lower a little bit the senior loan or help, reduce the equity. So it really depends. It's deal specific, but it's really great because it allows for, lower overall cost of capital. And I say another thing that's really great about CPACE is that usually CPACE lenders allow you to defer payments until your project's stabilized. So you're not necessarily paying interest right out of the gate when you start building your project. And next slide, please. So we just want to really point out also the benefits of local governments. What we see primarily now we have, as Ellen mentioned, we have 24, and shortly we'll have probably 27 jurisdictions enabled in next 3 months or so in our state. What we're seeing is that economic development departments and authorities are really excited about CPACE because it allows for a lot of properties that are in their jurisdiction to be revitalized in a way that wouldn't be possible otherwise. We were on a call yesterday with the city of Roanoke, for example, who's one of our local governments in the program. And several folks chimed in about how they own an old building they're trying to convert into apartments, or they have a need to revitalize old warehouse. There were some developers on the call that had new buildings. So from an economic development standpoint, they say this is another tool in their toolbox to help bring in local businesses, bring in developers into their market. If you're a larger locality or if you have energy efficiency or sustainability goals, it also supports those. And we've seen CPACE be included in a number of climate action plans or internal planning documents of local governments. So it really has a wide range of benefits to just help support the goals of the local government. Of course, if you're building new buildings, you're renovating buildings, you're also going to, of course, get the benefit of the tax revenue from those buildings once they're complete. And you're also creating jobs during the construction period in particular, and in the new uses of the buildings that are being put into place. Yes, thank you, Holly. Next slide. And we really want to point out, we get these questions a lot about what the local government has to do, what are their responsibilities. We really want to stress that, as Ellen also mentioned in the beginning, as a program administrator, we handle everything between us and Slipstream as our subcontractor, helping with the application approval process. We're doing everything from marketing and outreach and taking applications, approving applications, onboarding new local governments, dealing with any legal issues related to, just the docs themselves. We're really handling all of it. So your time is really limited to passing the ordinance. And when you pass the ordinance, you're also agreeing to join the state program. And you would then be involved simply when you're closing a project, and you'd be signing, the documents that make it a special assessment, which we certainly reach out to us. We can explain in more detail what that means, but basically your time is very limited. And we certainly have our existing jurisdictions that have closed PACE deals. We've closed in 7 jurisdictions. Can explain the minimal effort that goes into that because we really do that for you. That's the point. We don't want you to feel like you have another burden. You already have probably have a lot of projects to juggle. You're also not responsible. We took this out of actually in our program guidelines. You're not responsible for collecting any CPACE payments or dispersing them. And if you want, you can even delegate the enforcement. And we have that option there if you want to do that. And I'd say it's kind of half of said we want to delegate. The other 40-50% have said we want to decide on a case-by-case basis. But basically that even takes the treasurer out or the Department of Finance director out of the loop. And then really importantly, in all our docs, we really, you have no risk or liability regarding the projects. You're held harmless throughout the documents. There is no credit exposure or bonding impact, and you're not guaranteeing the projects at all. or the financing associated with them. Next slide. And I want to make sure I leave. We have a 45-minute session. I'm going to finish very shortly, hand the baton over to Steve, and then we're going to open up for questions as you may have them, because it is a lot of information if you're new to the program. And so we're happy to answer any questions you may have. But again, this is what we do. We're basically, working multiple stakeholders, multiple hats, and that's what we strive in. We like that. We like this, basically being able to provide this marketing outreach and education to all types of all kinds of stakeholders, and to make sure that the deal gets closed easily and as quickly as possible, and with minimal impact to your staff. Next slide is basically just to show you kind of the steps to joining. We have an education session with you. We meet with you. We talk to you about what PACE is, why we think it's, could be beneficial to your local government. We then help you kind of work through the documents, help you understand what what that entails. We have a template set of documents. So you don't change hardly anything but, your code references and names of your local government in those docs. And then if you need us to, we'll present to your board or city council to explain it to your elected officials. And when you feel comfortable with that, and you feel like we have support of council or the board of supervisors, you then would go to a public hearing. And we can be involved in that if necessary, and then you will adopt CPACE. And once you adopt CPACE, then you will have 30 days to then sign the locality agreement, which you have agreed to by passing the ordinance. And that is a short document with the Virginia Department of Energy. They're the technical sponsors of the program, and we have the contract with them to administer. And then the last slide for us is just to reiterate where we're at right now. We're really a good selection of localities throughout the state, and we are growing in all parts of the state. And we look forward to answering any questions if your locality you may have. Your developer, Steve, is about ready to come on to talk about the perspective from the lending side. If you're a contractor, feel also free to reach out to us or Slipstream. So I'm going to let Steve take it over now.
Good morning, everyone, and appreciate your being with us today. So I am with PACE Equity, and we are a provider of the CPACE program. We are all over the country, so we're not just local in Virginia. We have colleagues across the country working with developers to help them with their financing. The first thing I wanted to share is the more people that become aware of the CPACE program, the more popular it's become. Our phone is ringing, quite frankly, off the hook now that it's gotten some awareness here in Virginia and across the country. And I'm very excited about that. And I'm excited about that because we are a resource. We are capital that will help the developers across the country doing commercial real estate projects with their capital stack. It's very important to us to create impact in the various markets that we serve and to make capital available. The asset classes that are available vary: industrial and manufacturing, hospitality, assisted living, office, medical. So there's really a variety of projects that we can do. One of the nice things is that we had met a group called Suburban Capital. They're based out of Virginia Beach, and they were building a Hyatt Studios hotel up in Harrisonburg. Now, the great news for us is that Harrisonburg and that county were already approved for the CPACE program. So we were pretty proactive in saying, hey, this will be able to get closed in a fairly quick period of time. In this particular case, my developer partner had not been aware of CPACE. So we met a few times to discuss the program, to get them comfortable at what it could be. And they really appreciated three factors. One, it's a significantly cheaper cost of capital than traditional mezz debt. It is a long-term fixed rate, up to 30 years in many cases, and it is non-recourse. So when you speak to a developer about that type of financing versus mezzanine, which is 12 to 14%, shorter term, sometimes the rate isn't locked and fixed like ours, you can see why it's really taken hold across the country. Second of all, we wanted to be strategic. As Abby mentioned, CPACE is deal-based, which means if you're a developer on this call right now, we want to look at your deal individually. What are your needs? What does your capital stack look like? How can we fill it? What would be the strategy behind utilizing CPACE? I will tell you the great news about the program that Abby and Ellen and the team put together is that while it looks fairly challenging, it was so well put together that it's actually not as difficult to get it through the system. And one of the things to share with you, based on building codes in the modern era, most of the projects that we're seeing are going to qualify for the CPACE program. There is a misnomer out there that a developer has to redo plans and specs and change a lot of things. And the reality is they don't. And that's one of the benefits of the program once we educate on what qualifies for that. So in the particular case of the Hyatt Studios, the developer is incredibly experienced. They've got a great portfolio. They are building a number of these hotels across the Commonwealth and in North Carolina. We came up with, after meeting with them and speaking to their bank, which was in the senior position, that we would be 24% of the capital stack. Their bank would handle the rest as well as the equity, as you'll see in the next slide. What was great about this is this really turned out to be a fabulous solution for a company that now can redeploy capital elsewhere on future projects. And we were thrilled. They were tremendous to work with. They are experienced. I will tell you, in the 40 plus years in financial services and lending, they were such a pleasure to work with. They were responsive. They asked great questions. I think our staff was very thorough in walking them through the process. And if we go to the next slide, you will see that we were able to put together something where their equity turned out to be 28%. Their senior loan on the construction side was 48%. The measures that we were able to fund included their envelope and HVAC, their electrical, and their plumbing. What happens on the CPACE program, there is an engineering study that a provider will do to validate what has gone into the project and to make sure it qualifies for the CPACE program. Again, that's fairly easy to do. Your provider will take care of that for the developers. And in this particular case, as I said, this was a great one to do because the Harrisonburg region had already approved it. And I want to give a shout out to them because they saw the value as a locality to having an additional resource for developers to take advantage of this program. And if there's anyone that's on the webinar today from the county or city administration, I highly encourage you to look into the ordinance and pass it. Not only does it create jobs and revenue, it's taking so much of areas that need housing. And I'll give you a perfect example. Richmond, Virginia announced there's a housing crisis. Well, we've spoken to the mayor and to the redevelopment folks, and they're incredibly interested in utilizing CPACE to help with that housing crisis by enabling us to work with some of the multifamily developers there. So in a nutshell, this was a fabulous project to do. I will tell you that working as a partner with the senior lender was fabulous. And let me make sure that you all understand, because of what Abby showed you in the capital stack, rarely, if ever, will the CPACE deal be in as the senior. So in most cases, that senior, if you will, we do not change their underwriting guidelines. We do not change their equity requirement. We are a partner to the senior debt and to the developer to make sure that capital stack works best for all. And I wanted to make sure for those of you that are dealing with your banks and credit unions and various lending sources out there, that they recognize CPACE as a tool to build and finalize the capital stack, not take anything away from whatever credit standards there are that the bank might have. Outside of that, on this particular project, that's all I have. But Abby, Ellen, certainly will open it up to see if anybody has any questions for us.
I would just ask anyone who has a question. There's a couple ways you can do this. You can either raise your hand and I'll unmute you, or you can open the chat feature and type your question into the chat window, and I'll be I'm glad to read that aloud for everyone to hear. So we do have about 23 people on the call, so there may be some questions.
Well, thanks, Holly. While we're waiting to see them come in, I just wanted to thank Steve for that really great presentation. And I think it's really show you that we all work really closely together in trying to make projects happen. And we all, from different perspectives, the developer, locality, and anyone else who supports the CPACE program. But I think we do have some questions come in.
We do have a
Uh,
question
yeah,
asking
go
for some
for it.
examples or case studies of where the CPACE program financing has been used and generate renewable energy certificates. So have we done any rec projects or any renewable projects?
We have it in Virginia. I think probably some have been done in California, but it's been a while since I've been aware of them, but I do think there's probably been some with Rex in California. How about, did you know, Holly, by any chance through your programs that you
I
manage?
don't know about Rex specifically, but we have seen a lot of solar in, I know the Connecticut program does a lot of solar loans. We've done some in Wisconsin on dairy farms. So it's definitely being used. It's kind of what it was established for back in the day. Of
Yeah.
course, it's much more commonly used for HVAC at this point, but there are solar projects. And actually, I think we're seeing more of those nationally.
Yeah, there's a few of our lenders who actually used to be solar developers and they definitely like to focus on that. So if you have solar projects, feel free to reach out. We would love to do more of those. That certainly is kind of the foundation of CPACE is to support clean energy and energy efficiency. So happy to do that.
Abby, we got another question regarding if PACE can be used with other government loan programs, for example, SBA loans.
Yeah, I mean, I think we know that we've tried for a while for a number of years. We've tried to get SBA to be supportive, and at some point we thought we had made some headway. But I think there's been some legislatively. I think it's now pretty much impossible to do right now with SBA. So I think it's I would say that'd be a no for now. And I think for other government programs, we find it works with USDA. And it works certainly with tax credit programs, historic tax credits, new market tax credits. Low-income housing tax credits is a little more difficult. Those are have usually have financing through bonds, and it doesn't always work, but it definitely works for some of these other programs.
Do you want to mention HUD that we're working through?
Yeah, we're working right now to look to get that accept available in Virginia. It's available in maybe, I think, I don't know if you all know, 7 or 8 other states, maybe more. Very few projects have been done with HUD. They are allowing it, but I think it has to do more with the underlying underwriting that goes on that makes it sometimes difficult to pencil because you're really maxing out what can be done from a debt service coverage standpoint. So, but certainly if you have a HUD project, we can take a look at it.
Um, there's two other questions, and then Ben had his hand up. So let me take this next question. If I'm a developer and upgrading a 1935 building with new windows and utilities, can you participate if I already have another loan? How small can these loans be? Could they be as low as $10,000 to $30,000?
I'll take part of that, Abby, and I'll let you finish that. So just to address, there are numerous PACE providers, such as PACE Equity, each having our own guidelines that we go by. Ours, for example, is a $1 million minimum amount to finance. So in that example, we would not be able to help, but that's where Abby and Ellen come in, having their list of other providers that might have, less of a limitation. In terms of what you were doing, it sounds like that would qualify, for the CPACE program. That would just be connecting then with a provider that would not have any restrictions on the amount financed.
Thanks, Steve. We have a 50,000 minimum in our program, and that's because even we definitely projects under $1 million get done. it's really hard to find lenders right now who do under probably 300,000, maybe 250. We do have a few lenders who are out there that will look at smaller deals, and there's one in particular who might go down as far as 100,000, but it's not a big group right now. We're working on it though, because we think these projects are really important, just as important as the big ones. I don't know, Ellen or Holly, do you have anything to add to that?
Yeah, and if you go to our website, the Virginia PACE Authority, under capital providers, we have all of our registered capital providers listed, and then they have the loan amount minimum that they are willing to lend at. And as Abby said, most of them won't go down. Some are in the low six-figure range, but if you have a project that's 300 to 300,000 plus, I mean, you're more than glad to reach out. We are agnostic with our lenders, but we do know who might look at projects at that level. So always feel free to reach out and ask the questions.
I'm going to go to
Absolutely.
George. Oh, who has I think maybe a follow-up on this. So
Yeah, I see that. Yeah.
George, you want to unmute and ask your question?
Sure. Is it me that you're
Oh,
asking for?
Georgie. Yeah, sorry.
Yeah.
Oh,
Hi,
Georgie,
Abby.
hi. How
Hi.
are you?
Um, so my question is, Abby, how do you guys get funded? Where do you guys get the funding from? Is that part of the program? Are you a nonprofit? Just to clarify how, yeah, I missed the first few minutes.
Oh, that's great. Yeah. And by the way, Georgia is a great advocate and supporter in the Hampton Roads area. She's been really amazing and supporting our mission as a 501(c)(3). You know, we do, of course, go after grants occasionally and are always open to donations, you know, but our primary income comes from when we close projects. So we did get a little startup money when we first, started running, got the contract with Virginia Energy and got the state program up and running. But now we basically we're self-funded completely. So
Good.
thanks for that
Excellent.
question.
Excellent. Very exciting. That is finally happening.
Yeah. Thank you,
Um,
George.
we had another question about what asset class is most popular for CPACE.
I
Ellen, you want to answer that, or Steve? Yeah.
Well, I'll start just by the calls we're getting. The nice part is we're getting a little bit of everything. Ironically enough, assisted living has become very popular for CPACE. But I would say the two most active asset classes would be the hospitality, hotel area, and multifamily.
Yeah, I would agree
Yeah, and
with that.
we also, I guess, hospitality, we have some interesting, one of the projects we closed was like a wellness center. So it is hospitality, but it's not quite like what Steve presented today, you know, a classic hotel. So we can see all different kinds of projects. We have gotten some inquiries lately, potentially for infrastructure supporting data centers. We all know that's a big issue, particularly in our state, with capacity and whatnot. But yeah, we would love to, personally, love to see um, adaptive reuse even more. We'd like to see we feel like any kind of use that has a lot of energy, you know, the usage that is paid by the owner, you know, for existing buildings is very applicable. Of course, that is hotels, but also asset classes like hospitals. I mean, they have huge expenses in terms of energy and water, and basically, you know, PACE can help, defray those costs through energy efficient equipment.
Yeah, there's two other questions here, and I just want to make sure we follow up on them. One is regarding whether you can use CPACE for industrial or manufacturing, and then the other is about what makes a project ineligible. And I thought maybe I'd just take a minute here to talk about one of the key components of an application, which is an energy audit. So you can definitely use it for an industrial or manufacturing project. There would need to be an energy study done that would demonstrate that the equipment is saving energy over the existing equipment or over some building code standard or standard like that. So there's kind of this threshold with the applications to determine what is eligible and ineligible, and that applies to any asset class. I don't know if you want to add to that.
I'm going to give Ellen a chance. I just think she wants something to say about that.
Yeah, I mean, just in terms of what we've closed in Virginia, we've had several hotels, one of them being in the Petersburg area. That was actually a rehab of a 105-year-old hotel that they have continued to make into a hotel. And so we have a project closed in Leesburg that was hotel. Obviously, the one that Steve shared as well. We have an innovation hub. We also have a senior living facility as well. So we do see different types of asset classes there.
Different asset classes and definitely what we try to do with the energy study, quite a project analysis we call it, because we also include resiliency. We include environmental remediation, and obviously for those you don't necessarily see a reduction in energy costs if you're putting in flood proofing measures, but those do qualify, particularly in the Hampton Roads region. We think that would be really beneficial. We've been working with those jurisdictions and property owners to kind of identify those kinds of those measures, because there's something we're seeing more and more value to, because the insurance industry is really new FEMA maps have come out. Certain areas in Virginia, for example, with the new FEMA maps are showing a lot more areas in the flood zones, and that's going to impact insurance pricing, if they can even get insurance for some buildings. So we really think that resiliency could be a really, really strong benefit for property owners and even developers when they're looking at building a new project. Us and some of the consultants we know can help identify what kind of measures you'd want to install in order to, make sure your project is built in a way that's going to be resilient through time, but in addition, be able to obtain insurance and get a loan, because some of the big lending institutions will not lend if they see that your property is at risk.
And Holly, I did want to add something to regarding asset classes. Keep in mind, the CPACE program has different appeals to different markets. And I'll give you an example. Danville, Virginia, based on the casino that went in, has a significant need for more hotels. So there is a tremendous amount of hotel activity going on in that particular part of the region. I know there's a tremendous amount of multifamily going on in the Winchester region and in the Central Virginia region, et cetera. And so what's nice is that it's specific. I also wanted to mention that the lenders that are involved also have their asset classes that they may or may not lend on, or they may have restricted. And I will share with you, hospitality is not at the top of the list of most of the banks in Virginia. Some will do it, but some of them that I've contacted won't do hospitality at all. So keep in mind with your senior lender, what is their appetite, for the type of project, if you will, and what loan to value are they willing to go to?
That's a very good point. I was looking at I know, Holly, you've been doing the Q&A, but I just noticed what one of the folks mentioned about Hampton. Yeah. One thing I want to make in general about when you have a project, if it's not in an area that's enabled, that doesn't mean that we can't help to get it enabled. So I would say, with the exception of 2 projects, all the jurisdictions that have closed projects in Virginia, we have 7 unique jurisdictions that have closed CPACE transactions. 5 of them were because of projects. So if you have a project, it's amazing how much that really helps kind of galvanize everyone to say, how can we help this project? How we can make it happen? And we see that jurisdictions are often very, typically very responsive. So if you have something in that locality that you mentioned there, we're happy to talk and see if that can actually be a benefit. The city will be willing to talk. Holly, should I mention the next? Is there one more question here, or do you want to?
Oh, the if not energy, then how do you assess resiliency and remediation projects?
Yeah, so why don't we all kind of talk about this? I would say that we do have a program guide. Our guidelines list the ways in which you can qualify. It lists the typical improvements that we would include, not exclusionary, but the ones that we see that we can qualify. It can be cost reduction. So if you can show that or show that you're in some way making the building more resilient, that's done through a study as well. And there's engineers who can show that. We also are really, for existing buildings in particular, we're highly supportive of a new ASTM guide that went out called the Property Resilience Assessment. And it's a way to basically, identify any hazards you have on your property. That's pretty inexpensive to do. It's kind of like a desktop thing through software providers, not anyone associated with us directly, but we know of some that do that. And then you kind of see what those hazards are, and then you can start identifying potential projects from there. So it's just a process. It's just not as obvious maybe as energy efficiency, but you can certainly do that. And for remediation, think about asbestos, think about mold, lead piping, things like that as examples of projects that would qualify. Anyone else from our team want to add or that?
I would say just with a remediation project, we'd want to see a phase 2 environmental that identifies what the um, areas of concern are, and then what the remediation plan is. And then if there's, a state approval on that or something, that definitely would clarify the remediation project.
I think a new,
Yeah, we have another question here from Ben.
yeah, go ahead.
Can CPACE program be paired with tax incremented financing, opportunity zones, or opportunity zones for mixed use projects?
Yeah,
Steve?
I'll take the answer is absolutely yes. We do a tremendous amount of this type of work across the country. In fact, it's one of the things that we like doing because we like building. And as I mentioned earlier, packaging this capital stack to include any of these incentives, opportunity, enterprise zones, HTCs is actually a great way to get a project done. And it's probably one of the more popular utilizations of CPACE, at least in all of the jurisdictions that our company deals in.
That's great.
Yeah.
Ellen, about Andy or Ellen, do you have anything you want to add about that?
No,
No.
Steve covered it.
I know Steve is you're really, you know how to encapsulate the opportunity perfectly. It's really great. I don't know. I think what I think is really this session was for is to introduce you to the concept and really, have you look at our website, virginiapace.com, have you look at Pace Equity's website, pace-equity.com, and then come back and speak to us about any questions you have and show us your projects. It's usually, I find, as we saw in some of the Q&A, it's kind of easier to answer when you have something specific to talk about. So that's what we're here for. We want to help make your projects come to fruition. And if your locality, we really want to have interest in understanding more how it could benefit your locality. We're all ears, happy to help, happy to reach out. So we only have 2 minutes left. Does anyone else have anything they want to add before we wrap it up?
I'll just mention we will email out the presentation recording so you can share it with your colleagues if you like or something.
Steve?
Nope, all good. Appreciate everybody being here. Hope this was helpful.
Yes, thank
Ellen,
you,
do you
everyone.
want?
Yeah, no, thank you,
Well,
everyone. We are so glad that you came and we are looking forward to chatting with all of you or any of you who have projects and to help shepherd these through.
Yeah, we
Absolutely.
do have another webinar coming up on, oh, sorry, Andy, go ahead.
Go ahead. Saying yes.
I was going to say we have another, these are a series of webinars, and our next one is going to be at 11 a.m. on the 1st of April. So stay tuned for information coming into your email box or through our LinkedIn channels and our website for that. Go ahead, Andy.
No, that's it. Thank you.
Well, thank you very much for participating, and we hope you have a great afternoon, and look forward to seeing you all on April 1st for our next session, next webinar.
Thank you.
Thanks.